All right, hello everyone, Doug with thelincolnlist.com. Let me give you the official welcome to another whiteboard lesson. Man, it's been a while, guys, but here I am. I'm ready to get my education on, so please stick around. Now, before I get started, if you do like this video, click that you like it, and also subscribe to the channel if you haven't done so already. I'm constantly posting free material on here, free trading material, such as these whiteboard lessons, the market mutterings, and also the happy hours. I'm going to post a link up here on the screen as well for those out there that are trying to become professional traders or those that are interested in becoming traders for a living. We've just recently updated the website and all the educational content. There's over 100 hours of both paid and free content. We've added the live trade room as well as the live trade feed. So regardless of what level that you are on, what you're trying to get from your trader education, you will find it at thelincolnlist.com. Go ahead and click on that link. So what are we going to talk about today? Well, we're going to talk about that inevitable moment every trader is going to have to go through, not once, not twice, but hundreds of times throughout their trading career. That's how you get your mojo back. How do you get back up after taking some losses? What are the steps that you need to take? And this will be one of the most important things for you because this is something you're not going to avoid. So I don't care what level you're at right now. If you're watching this, those that are trading, you understand exactly what I am. Those that are new to it, you're not going to get around this. If you're going to trade and you're going to do this for a living, you will take losses. I don't care what anybody says. You're going to get hit from time to time. And it's going to be more about how you react to that, how you get back on your feet, how you get back into the game, and how quickly you're able to do that is going to matter how successful you become. You're either going to lay down and stay down, or you're going to get back up and proceed. So we're going to talk about that right now. There are two scenarios that this normally takes place for a trader. And one of those is it's a single event. And for some others, it's a repetitive. Okay. So we'll first start here with a single event. What does this mean? This means that normally you were trading very well. You've been on a nice streak. You've been making money. You seemed or you felt as if you really had this under control and you reached a new area, you crossed a bar or a boundary for yourself, and you entered this new realm where you thought, look, I got this. Then all of a sudden, this one loss comes out. Maybe you got stuck in, there's several scenarios. I don't even need to go over them. You know exactly what I'm talking about. You ran into something after going through this long period of wins, you run into this big loss, and you just immediately got hit. Now, normally in this case, you either became a victim of your greed and your ego where you felt, look, I'm a really good trader now. I know how to manage my losses. If I do get losses, I know how to trade my way out of it. And just like that, with the snap of the finger, the market will always humble you as it does every single one of us from time to time. And here you are with this large loss. Now, the problem with this large loss, I'm not talking about the tiny ones that are part of doing business. When I say large losses for you guys out there, what I mean is the type of losses that take away weeks, months, or even an entire year worth of all your good work. Now, we've gone over this before on how important this is to contain that, because you're not going to be able to be a trader for very long if that's the type of pattern that you have, because you will, every time that happens, you will lose a little more confidence and a little more confidence until finally you just had enough. The strongest willed people will have had enough after that point, because nobody wants to be in a career where you're doing well for 5 or 6 months and then you lose your whole entire livelihood on one stupid trade. But that's also another topic. When we talk about that single event, it's usually a product of you doing really well, letting your ego or letting something happen, and please don't be too hard on yourself. We've all done it, but something will come along and it'll pinch you a little bit, and maybe it takes away a couple of weeks of gains, or it's really a little bit more than you wanted it to be, and you've got a deep setback. Now, the first thing that you've got to do immediately is you've got to get back into the game. You've got to get back into trading. Now, when I say immediately, I don't mean just take a trade just for shits and giggles. You don't want to do that. It has to be a setup, has to be part of your plan, has to be part of your process and all that. But you need to jump right back into the market as quickly as possible when the setup arrives. Just don't do it to do it. The next thing that you might want to do here, depending on the depth of that loss and how hard it was, is just to take down a little bit of your size. Maybe you were trading, let's say, 400, 500 share positions. Maybe cut that down in half, but it's important for you to get back on the horse, as they say, as quickly as possible. This is something that they always talked about when I was racing motorcycles a lot. There's always going to be that inevitable moment where you wrecked your bike, and it wasn't one of those small wrecks. You actually did some serious damage to yourself, and it scared you a little bit. Maybe it was a near-death experience or whatever it was. If you allow those events to pile on and you start thinking about the worst case scenario, and yes, sometimes worst case scenarios can happen, but if you dwell on a worst case scenario, you will ruin yourself psychologically. So when you're looking at these people that are professional athletes or professional business people and they suffer these major setbacks, you can't allow that event to keep you down, because if it does, it will have that psychological impact that will ruin. It'll make you gun shy. And to a trader, the only thing they really have outside of their process is their confidence and their belief. I mean, isn't that what we live on, is confidence and belief? I mean, that's wonders for a trader. You've got to have those two, confidence and belief. So when something like this happens, it questions that process. It questions that confidence. It questions your beliefs. And then you start getting a little sheltered, or you start curling up in the ball or something like a turtle shelling, like I like to call it. You can't do that. You got to get right back into the game. But rather than just go back into revenge trading, take a nice deep breath, take a step back for a second, wait for the next setup, and start to build back up. Now, when you do that, don't focus on trying to get all of this money back. It would be nice if that happens on the next trade. But most likely, if it was a trade that took out weeks or months of your gains, I would be safe to say that it's more than you've ever made on a single trade during the course of that year, right? So your average win is nowhere near the size of this loss. Again, I'm not going to criticize. It's not a whiteboard about how to control those losses. It's about what happens after those losses. So I'd be safe to say that would be the case here. Don't worry about trying to get this money back. Just jump back in, lower your size, be a little bit more patient, and wait for those setups, and you should be able to get right back into your rhythm. Now, the next one's going to be a little bit more difficult, and that's going to be a series of these events. This will be something where you didn't take just one loss. You've actually entered a cold spell. Now, to me, I feel cold spells are a little bit better, because normally what happens in a cold spell is you're just off with the market. You didn't do anything stupid like this single event. You didn't like oversize, you didn't disobey your rules or disobey a stop like a single huge loss. You've had a series of really bad trades. Now, if you're doing that, most likely you haven't lost a whole lot of money in that yet. Maybe you have. But what's happening here is you are starting to lose that very first thing that I talk about, your two things actually, confidence and belief. But rather than having that emotional impact of one event that's really traumatizing, it's stretching itself out for weeks and 2 weeks. And this wears on your confidence in the parts where you start thinking, maybe I don't have any more mojo. Maybe whatever I was experiencing when I was successful was just luck. I don't know what I'm doing now. I've lost my touch. Maybe I'll never ever get it back again, and it's going to be like this forever, and my account is slowly going to bleed to death. Now, you want to approach this the same way, but in this case, you've got something different, and that is a bunch of losses. So whatever your process is, whether it's fundamental or it's technical analysis, you're wrong. You're wrong on it. Now, maybe you're wrong on it because the market has changed and that strategy doesn't work as well anymore, or maybe you're delusional that you have lost so many times that you're confusing. That's how the brain works. You're confusing what your actual strategy is. You're confusing and you're delusional about what you think is a really good setup. So you're kind of confusing yourself and you're talking yourself into things that you shouldn't be. So kind of the same steps here. The first thing that you need to do possibly in this area, depending on how long, if it's been an extended period of time, weeks, I'd say longer than a week, 2 weeks, maybe take a day off. Just sit still for a minute. Whereas here you want to jump back in right away. Here you've got a little deeper problem. You're going to get frustrated. You're going to start revenge trading, and a lot of things are going to snowball here, and you can potentially get out of control. Don't worry about taking a day off here and there if you need to. You'd be surprised on just what one day stepping back, not looking at your computer, not looking at charts, just to kind of reset yourself. I've always noticed that every time I go on a vacation and come back, my trading gets better. It gets a lot better because sometimes we just need to get the hell away from this stuff, right? I mean, we've just seen enough. So maybe, just maybe if it's gone longer than a week, you've had a series of losses, you've had days where you've lost 3 or 4 in a row, 5 in a row, just take a day off. There'll be better days, trust me. The market's always open. There'll be better days. You can come back at some other time. Just come back when your mind is clear. Now, when you do come back or you take a day off or so, you want to follow some of the same procedures up here, and that is always going down to a lower size. Size will start to remove anxiety and all of those fearful emotions that traders go through. And you're going to be sensitive at these moments. You're going to be sensitive to stopping out. You're going to be touchy. You're going to be a little bit more emotional. So you're going to have to understand, you're going to have to allow yourself to have a little bit larger leeway in some of these trades. So kind of lower your size so the impact isn't so much. Now, if it's a repetitive amount of losses, you're going to have to look at this process that you have. Okay? And what is happening to this process? What type of a trader are you? That's your trading plan, your trading process. Where are you going with this? And like I've said in 100 of these whiteboards, if this is the first one that you're watching, if you want to know this, we talk about it every single time in all of my stuff. I'm sorry for my crappy penmanship. And that's idea execution and management. If you're screwing up with your process and you're rushing it, you're doing something wrong. You're either blowing your ideas, the ideas that you're coming up with, they're not very good ideas. You're not thinking these ideas through. When it comes time to executing, you might be jumping the entries, you might be cheating or pinching in or trying to trade, forecasting what might happen rather than actually waiting for it to happen. And then maybe you're just sensitive to management. The losses and being underwater on trades and having a lot of drawdown is wearing on you emotionally. So depending on what it is, the most important thing you need to do is get back into the game if you've suffered a big loss and just start taking your size back a little bit and just being a little bit more patient. Now, if you've had a series of losses, maybe you actually need to take a day off or two just to get yourself emotionally reset and then come back in and have that same philosophy. Lower size, more patience, better setups. Lower size, more patience, better setups. Lower size, more patience, better setups. Just be particular about those. And you'll eventually work your way through it. But this is really important. And don't underestimate this, guys. You have got, if you want to do this, and this is the career that you chose, this is one of those darker points. You're going to deal with this hundreds upon hundreds of times. We're all going to take big losses. We're all going to continue to do that. So you're going to have to just, when I say big loss, I'm saying you're like always going to blow up your account, but you're always going to have to get back up. You're always going to have periods of time where you do really well, and then you're going to be in a holding pattern. And the difference between the professional traders and the amateurs is when they go through these moments here, it's how they handle it. That's all. Where an amateur will just run in there and try to revenge trade, get their money back, try to be egotistical and, oh, I'm going to show this market. I'm not going to lay down, because that's what your DNA is, right? We get knocked down, we get back up, we fight harder. When you fight harder against the market, that doesn't work. That does not work. The only thing different as a professional is they're able to recognize this, react quickly, gather themselves up, get their composure together, and then reattack. But reattack intelligently. Intelligently. So anyway, guys, I hope this whiteboard made some sense to you. If you do need help, visit thelincolnlist.com. Until the next whiteboard lesson, or you have any ones you want me to talk about, please put them down in the comment box. Take care and trade well.